Welcome back, everybody. This is Squawk Box on CNBC Europe. If you're looking for an opportunity in the commodity market, let's spend a moment highlighting uranium. Spot uranium prices are likely to hit record levels of $100 a pound this week, according to market specialists. The ore is used for the production of nuclear energy, and it's been on a steady climb for more than a year now on tightening supply, decreasing reserves, and falling global production capacity. Joining us to help us analyze the uranium market is Richard Clement. Richard is president and CEO of Powertech Uranium. He joins us from Zurich, rather confusingly, but Richard, yours is an American company.
No, the company is a Canadian company, but we have our operations mostly in the United States. Thank you.
All right, well, that clarifies, to my mind, somewhat. Thank you very much indeed for that. Just on the fundamentals of the uranium market, can you give us your view on the outlook for uranium demand?
Well, the uranium demand is quite strong because currently that we're producing approximately 100 million pounds a year on a worldwide basis, and the demand is 170 million pounds a year. The rest is being made up out of stocks that were produced back in the late 70s and early 80s. But this shortfall is going to start affecting the market, and people starting recognizing that the opportunities there now for additional production, and with a new forward-looking demand for nuclear power, that people are more interested in dealing with greenhouse gases, and countries like China and India are planning on between 20 and 30 reactors apiece. There's a tremendous interest in uranium being developed in the future, and that has taken the uranium price from approximately $7 a pound 7 years ago to $95 a pound today, and it's anticipated it's going to go to $100 a pound very soon. Yeah,
what confuses me is apparently uranium is relatively abundant, and yet on the supply side there continues, it would seem, to be a shortfall of production to meet that demand.
Well, part of the reason, mostly the reason, is because during the 70s and 80s, when there was tremendous demand for uranium at that time, there were major oil companies, a lot of the major mining companies were involved in uranium mining, and then after 3 Mile Island, there was a dearth of interest in the uranium business. There was only a handful of companies that were producing during the late 80s and the 90s. And so consequently, a lot of the infrastructure that was developed early on has been dismantled. But now that there's a tremendous surge in interest in nuclear power, that there are a number of companies that are getting back in the business.
How easy is it to find specialists in the mining arena? We've talked a lot about other commodities, and particularly I've looked more into the oil business, I suppose, and there's very high inflation and a real lack of expertise because of some of the issues that you describe in terms of that bull and the bust from the 70s to where we are now. Is it easy to find the specialists you need?
No, there's very few. In fact, our company, Powertech, has some of the key people that developed some of the original uranium deposits back in the 70s and 80s, and so consequently that it's very difficult to find the right people, and our job is really going to be using our expertise and training the new people who are coming on to make sure that they know how to do it in the most efficient manner possible.
Can I ask you where you think we may go on the price for uranium per pound then? Over the next, 18 months, 5 years, as the mines start to make up this production shortfall?
Well, the price of uranium that the IAEA is showing in terms of cost is $130 a kilogram, which is about just under $60 a pound in terms of overall cost for most of the reserves that are available in the world today. So consequently, it's going to have to stay significantly above that to interest companies in the development of new deposits. So we see the margin now between what the costs are and what the current price is being incentive enough for a number of companies to be in the business, and it should stay at least in this range, I believe, in order to maintain that incentive.
This looks like a business that is vulnerable to supply shocks at different times. I throw into this Cameco's situation with Cigar Lake. Clearly, that was a major issue for that company, but also for the market as a whole. How easy or difficult is it, sir, do you think, to invest in uranium if you are a retail investor interested in getting access to this material? How do you view it as the president and CEO of a company that's in this business?
Well, we think it's a very good time, actually, to be investing in the opportunity. Our company is trading at a very reasonable price. We're not in production yet. The company just began last May, so we're less than a year old. But we have major uranium deposits in the United States that we're going to put on stream in the next 2 or 3 years. A lot of companies will be in that business, so I think that there's an opportunity right now for people to invest in the mining companies and the smaller companies, and you're playing the junior company sector in the uranium business. There are very few companies that are major in size, except for, let's say, BHP and Cameco and RTZ. But other than that, you're dealing with a number of smaller companies, and there's a good opportunity for these companies.
And I hear among the specialists some talk of a strategic stockpile that the US has that could be released to market, which could, in the near term, suppress the price. Richard, do you think there's any likelihood of that happening?
Well, there's a lot of discussion about using some of the nuclear material that was developed for the arms program to be brought into the market, and that's done in such a way that we've had numerous discussions with Congress and key senators to phase that into the market, so it won't disrupt the market significantly.
Sir, nice to talk with you this morning. Thank you for giving up your time for us. Richard Clement, President and CEO of Powertech Uranium, on uranium as a potential investment.